Welcome to another episode of I Own a Business, where we focus on helping practice owners grow the practice of their dreams. I'm your host, Dr. Steve Vargo, and today we're going to tackle the question, how do my practice financials compare to other practices? And to help us answer that, I've invited the person who's possibly the most qualified in the industry to speak on this topic, IDOC's own Director of Financial Services, Nathan Hayes. So Nathan, welcome back, I believe, a third time.
Yeah, it's great to be back. Thank you. Do I get a jacket or anything for the third
That's
visit?
that's five times. So
Okay. There we go. You're so
we'll keep
right.
coming back. Keep overperforming,
Now
and
we have goals to set. More visits with
yeah,
Steve.
we're going to get into that. So that's your goal for the next quarter. As we talk about comparisons, because I think that's where a lot of probably not just ODs, but businesses owners in general, they want to know, how do I compare with my peers, with others in my industry? And as we talk about making comparisons financially to other practices, maybe start by giving some background on the IDOC books and benchmark service and how we actually collected the data that allowed us to come up with updated metrics for the industry.
Yeah. So books and benchmarks, the start of it, and this has been a long time coming as a goal of mine to update um, the publicly available data, certainly for what practice financials look like. I mean, that we had the SLOR-SEBA Vision MBA report that really stopped adding new financial data in 2012. And we've, over the years in our time together in Prima Group, even before IDOC, tried to have doctors self-report some metrics, and it's just really hard to do that, both from asking the doctor to spend the time filling out a bunch of surveys, and also just the quality of their financial statements doing it. So, with the goal of um, updating and understanding the practice overhead and finance, and maybe for audience members that don't know me, um, I've been consulting with independent optometry practices on overhead profitability, strategic decision making for years, and with a real focus on using benchmarks and data, usually to validate doctors' intuitions about what their business needs. I mean, most doctors know, like, if they feel understaffed, they probably are, but it's scary to think like, hey, I'm going to put $30,000-$40,000 on the payroll. Is this really the right decision? If you can say like, hey, compared to most practices, you're 1.5 staff under what's normal. It really gives them freedom to say, okay, I'm going to move forward. So that's one. But starting with the financials, our view was, if we really wanted to have accurate and reliable data, we needed to do the books for our clients, and that was really the genesis of books and benchmarks. We've been building a team of bookkeepers. We've got 6, hiring for a 7th and 8th right now, serving about 140 clients across the country. And we do monthly bookkeeping. So we're in their QuickBooks Online file, accepting transactions, categorizing them, reconciling everything to statements. And then we take that data from QuickBooks Online, and we have a benchmark engine that pulls from our chart of accounts and then reports back with pretty proud of the series of histograms to help owners like visually put in perspective, like, how does my practice compare to my peers? And a lot of our philosophy, I mean, there are other services that sort of say like, you're the 20th or 30th percentile, and I think that's useful at some level. But I think seeing distributions helps to say, because sometimes they're pretty tight in the middle. And like, hey, I was just writing about staff costs last night, and like, really, like, our average, if you think like normal is the middle 60%, so call it a little less than one standard deviation from the mean, or 30 points off the median, either way, it's between 20 and 27% is what practices spend on staff. And considering that our practice range is like under 14 to over 35, that's actually a pretty tight window in the middle. Now there's a lot of noise at the extremes. But seeing that helps practice understand, like, hey, maybe I'm not quite normal, maybe I'm the bottom 20%, but I'm right at like the 20th percentile, and it's pretty close to what's normal at the end of the day. So that's a lot of what we're doing. And our view is that as much as we can automate this for practices and not make them send us 25 cell spreadsheet every month, that's the goal. And maybe the if I can go on the product for just a minute, we're rolling in some operational benchmarks this year, so integrating things like the staff full-time equivalent count, doctor hours for owners and associates, square footage for the office, pulling in some exam count data from IDOC Insider, which is powered by EdgePro. And again, our doctors now, there may be 4 unique things they need to tell us every month about their practice, but it's certainly not 25 on that they might be telling other services.
I think you alluded to this a little bit, but would you look at this differently if you're, let's say, a $500,000 practice versus a $2.5 million practice? There's going to be some variability, but should you interpret the result differently based on your current revenue?
Yeah, I think so. It's interesting on expenses. Size can have an impact on overhead and profitability. I think it's not necessarily in the ways people think. So I think there's, my experience looking at over 1,000 practice financials, I'm not at all convinced that scale really moves the needle a lot on like negotiating cost of goods at a like per unit basis. I mean, at the margins you're going to change it, but it's not going to be like your cost of goods is 5 percentage points lower than a $500,000 practice because of your size. Like your cost of goods is more that. Um, Fixed overhead and sort of the efficiency above rents and equipment costs, like yes, absolutely. Larger practices we generally expect to be more profitable. But I will say, if you wanted to ask, like, what's the biggest variable practice to practice that would explain differences in their overhead picture? I think it's less size and more geography. And by that, I mean, if you're practicing in downtown Manhattan, New York, versus my hometown of Vicksburg, Mississippi, your expenses are going to look radically different on the rent front and on the labor cost front. And I think those are the ones where, and even within states, because people will ask me like, "Hey, can we see like the state of New York?" Well, we could do that, but Buffalo again looks radically different from Brooklyn. Buffalo looks a lot more like I don't know, Jackson, Tennessee. That's probably too small. Knoxville, Tennessee, maybe. The sort of a secondary market city that rents aren't as high, labor isn't as expensive. So I think from a global standpoint, like we as we get bigger, and 150 is not enough to really start slicing data. We'd need about at least 30 per bucket to really make some claims around a different grouping. But our vision would be certainly to say like, hey, we'll put Chicago and New York and Nashville and Austin together and say like these probably look a lot more similar and more suburban and rural areas together. Some levels, your revenue mix can dictate a lot. So we should be able to sort of by the expenses identify like what practices are more medical model versus more retail driven, and maybe put those together as well and say, like, hey, what is the difference in staff counts and overhead depending on model there? So that's probably a longer answer than you're looking for. Sorry.
You're a talker, but that's good. We appreciate what you have to say. Nobody's going to accuse you of being, short with the answers, but that's all right. Everything was valuable. You gave a really good overview of books and benchmarks. Before I'd like to dig in a little bit more to the books and benchmarks report
Yeah.
and some of the areas where I think doctors can actually impact their numbers, because other than that, it's just a report filled with numbers. But what do you do with that? So
Yeah.
before we jump into that, can you give an overview, just a quick overview of the data that you captured in the report so people
Yeah.
have an idea of what they're actually going to be looking at once that becomes available? And I'm also curious, were there any surprises? Because,
Yeah.
with the world, I think there were a lot of question marks around data even before COVID, because like you mentioned, we were looking back on some of the older studies like the MBA. What did you say,
Yeah.
2012? So
Hmm.
that's old data. I think it's generally been accepted that numbers don't change a lot from year to year. COVID hit and threw everything off the tracks. And I think a lot of people now are wondering what's the new normal. So
Yeah.
that being said, give a quick overview of the report, what kind of data you tracked, and also are there any surprises in there in an industry that doesn't change a lot? What about now in this changing world that we're in?
Yeah. So the report, we're obviously running a business. We want people to sign up and use our service and pay us money, and we're trying to grow. So to some extent, this is a marketing exercise, but it's also one that, um, we hear the question enough that we wanted to share what we're learning. And there's a lot of, misinformation is kind of a buzzword these days, so I won't use that. But there's a lot of confusion, a lot of anecdotal claims around what practices should look like that I see, in the Facebook forums, et cetera. So we wanted to take a stab at saying, hey, we've got a reasonably representative set of practices. In some ways, not that would lead to some of the surprises. And let's share what's there. And I think for a lot of practices, talk to their peers or hear something in a lecture or read something in a journal article. And the challenge of a lot of those articles in particular, or even lectures, is like you have a practice owner that owns one practice or maybe a couple of locations in a particular market. And so they know what their business looks like and what looks for them. And they may sort of generalize that everyone ought to look like me because this worked for me. I think for a lot of owners, just to see that, I don't look like everybody else, but I look enough like everybody else that like I shouldn't worry that I'm vastly overspending in areas. I mean, the most effective way to work on any of this stuff is work on growing your revenues. Like if you grow your revenues, you really have to mess something up not to become more profitable and have better cash flow. So a lot of the vision here is like see that you're normal and then just go work on your business is what we'd say. In terms of surprises, there's two, and maybe just at a high level, the way we sort of make the simplest pie of overhead and profitability in practice is we look at three buckets. We look at variable costs, which we'll define as cost of goods sold and non-OD staff, sort of the things you spend more on as you see more patients. Yes, I know doctors also you need more of those as you see more patients, but they go somewhere else. I'll explain. Fixed overhead, which is just it's things like occupancy costs, equipment, marketing, general administrative expenses. It's the stuff you spend money on regardless of how many patients you see. And then we'll use optometric net or practice net as our sort of benchmark for profitability. It does include all the doctor's pay and the profits of the business together, and that's just to make apples to apples comparisons across practices, regardless of ownership structure, single OD owner, partnership, partners with associates, owner and associates. Like just putting the doctors together helps, and especially because owner wages can be all over the map for a lot of reasons. So just looking at like a net income or EBITDA number, there's a lot of noise in that. So surprises. One, variable costs are, I think we all intuitively know inflation has happened. Variable costs are way higher than I would have expected. So coming in, if you asked me what it looked like, I'd say they probably run between 45 and 52% of revenues with a median around 48, 49%. They are running 47 to 56% of revenues, I think. Median's 52 with a skew towards the high side. If you look at the bell curve, that's a real surprise. And it's, the thing I've sort of been preaching to people who are feeling like, oh my gosh, I'd rather stuff my overheads off of what you said is like, yeah, everyone's like that, and just take a breath. Like expenses have leapfrogged our ability to drive incremental revenue, and as a profession, we're gonna have to figure out how to have revenue leapfrog those expenses again, or new ways to manage overhead. But it's a real challenging environment, and it's not. I'm not sure that it's like practices are doing it wrong if they found that they haven't been able to keep up with inflation in terms of pricing, and a lot of it's a managed care environment. We can't just raise our exam fees and have that pass through to every patient. So that's one surprise. I think the other one, and this does have to do with who our clients are. Fixed overhead as a percentage of revenues was a lot lower than I would have expected. I do think our median practice is about 1.6 million that's in the service. That's probably 50% above national averages. And I think that explains most of that we're in, it makes sense that a professional bookkeeping service, larger practices are, that virtuous cycle of being conscientious and caring about this stuff is part of why they're larger, also more likely to use a service like ours.
The uh, the I'd like to talk a little bit about the control aspects of this data that ODs have control over, because I think that excites them more than the fixed cost, like your rent is high, which
Yeah.
is hard to change, right? When that's
Yeah.
the case, the conversation becomes, well, we have to figure out a way to see more patients. But there's other areas that doctors can take steps to impact the financial picture of the practice. So if I could, as
Hmm.
after I've read the report, there's some areas I want to get your feedback and elaboration on. Salary. We talk about inflation, but there's a salary creep as well that,
Hmm.
especially post COVID, has become a pretty big concern for a lot of practices. Just finding help, but also the ones they do seem to want more money than they did in years past. So,
Yeah.
what's your take on that and some ways to handle that?
Yeah, I think there's sort of two paths I would have practice owners go down. One is you really don't want to be caught flat-footed with your staff saying, we're underpaid and just trying to get in a spitting contest over are they right or wrong. I think it would do owners well to, certainly on an annual basis, like go to a Glassdoor, go to some sources and figure out like what is the average wage in my area for a licensed optician or a receptionist or a technician. Managers are kind of all over the map, but even looking into that some, just and because if someone comes to you and says, "Hey, I think I need a raise. I think I'm underpaid," you can say, "Look, I've looked at it 2 months ago, and we're actually, according to these data sources, paying you 20% above market." I think it's a way to know what you're dealing with ahead of time. I think you will be a hero and build a bank of goodwill if you actually went to your team and said, we were doing our annual salary study and we've actually fallen behind on your wages. We're just going to give you a raise because the prevailing wages for a technician have gone up, and we really like having you here, and we don't want you to just look at an ophthalmology group and decide like, hey, we've been underpaying you. So that's one. And I know we're talking about controlling costs, and I'm saying raise them, but turnover is probably more expensive than bumping someone up $2 an hour if it's necessary. So that's one. Um, you can, if you feel like you're well above market on wages, like one, you should celebrate that with your staff. You can freeze cost of living adjustments and say, hey, we're going to put in a company performance-based incentive so that you can continue to earn more based on company performance, but it's not going to like add every year to that baseline of your base wages, because variable comp doesn't reset the base wage. So you can wait until inflation brings their base wages back into line and then maybe move to more of a cost of living adjustments. And of course, performance and role and responsibility will drive some of that. The other area that's exciting right now in terms of managing that cost and really even sourcing employees, which is getting a little easier, but it's still a really tight labor market, is looking to offshore or outsource functions in your office. And certainly what we do at Books and Benchmarks, you do not need a bookkeeper on site to manage your financials. In fact, for a lot of owners, having the bookkeeper not on site and not, part of the team seeing that the owner's income is probably a net good thing. But a lot of the outsourcing firms right now, like you're looking at taking on receptionists or even like virtual scribes, um, at maybe $10 to $12 an hour for someone who is college educated, speaks good English, and is maybe your most reliable employee and really excited to work for you. So there's some interesting areas to look at outsourcing, especially in more urban and more expensive markets where not only are you space constrained, um, but if you have to spend $22 an hour to get a warm body, let's make sure we're only getting the warm bodies we really need to serve our patients in person, and then look at other solutions for other roles in the office. And really, most of that's reception and pre-authorizations. It could be billing and managing the revenue cycle. And again, scribes are sort of an interesting one as well, to have an iPad follow you and just document your exams while you're going.
Yeah, I think we both heard from doctors a lot more interest in the virtual assistant option in finding outsourcing the labor where they can. And it's an interesting point you brought up about having the data, even when it comes to being able to show staff who might think that they're underpaid, that this is actually a norm. And that could be a similar conversation, maybe even with the partner, if you don't agree on expenses, being able to pull data like the kind of data that we have here to look at how you compare with other practices to help you make better decisions. On practice net,
Mm-hmm.
there's some pride that goes into having a real strong practice net, but there's also
Yeah.
some suspicion that goes into which I think we've heard when somebody's beating their chest over a 40% net is like, okay, is it efficiency or is it neglect? Can you
Yeah.
speak to that? And how do you dig
I
further
think you
into
just
that?
named it really well. Um, I think so. A bedrock principle and a sort of cheeky way of saying it is I don't believe in shooting on practices. So, depending on the owner's goal and circumstances, like running for a really efficient and high net practice could be the answer. I think in general, and this usually comes with like acquisitions. If you come to me with a practice netting 48% of gross, I'm going to have real questions about like, okay, what has the owner done in terms of infrastructure and people over time? And have they just been starving this business of what it needs, or are they actually really efficient? And sometimes the answer is it's just really efficient. I mean, my hometown, you can pay $8 a foot for rent, and starting wages at $13 an hour. You can be pretty darn profitable with those sort of fundamentals in your overhead picture. And it's not that you're neglecting things; it's just that's what it is. Um, but there are others where, I mean, you look at the practice and the equipment's 100 years old. There are no staff, so it's a little tough there. And then also like, and this is, I think a lot of doctors struggle with this, especially on valuation stuff. Your bottom line net income, if you're really using it for a valuation, you have to make sure you price the owner's salary appropriate. And that's an area that people sometimes forget. So um, those are areas to just be aware of as you're looking at that. But I think like, let me say it differently. One question I'd ask with the super high net practices: are there areas that you could be spending money to drive revenue growth, like more staff, more space, better equipment, etc. Some owners don't want to grow their revenue. They don't want the complexity. And at that point, fine, let's run it for profit. Or maybe you're a really rural practice where you're seeing every patient in your local market. There's really no need to put any more money back into that business than what it takes to maintain it. We run it for the cash flow. We save the excess cash, and we kind of know that this is what it is. So there are circumstances where it's totally acceptable that we're not really reinvesting for growth. But it's kind of a case by case. So every consultant's favorite answer, it depends.
And just so we don't have to edit or bleep, Nathan said shoulding
Yes, shoulding on
on
practices.
practices. So there's
I certainly don't
there's
do
a
the other
family
thing.
friendly practice.
We take great pride in being nice to our owners, and I think we've both had people over time say like, I didn't want to call because I'm kind of embarrassed. Like, please just tell us what's going on. Like, we're not going to make you feel bad. You are where you are, and it's about finding solutions, not telling you that you're doing it wrong.
Just we'll go through a few more here, and I'm just teasing these out because I want to give people a taste of the kind of things that they can get from the data as they apply it to their own practice. But you alluded to the doctor's own salary and paying themselves. Well, can you expand on that? Because I think that's a question that comes up a lot as well.
Yeah, and in the online forums that I sometimes track, like how we define profitability is a really sort of almost contentious topic. Um, but there's different measures for different things. I think if you just wanted to say like what's a healthy profit or net income on a business, you can't just look at P&Ls and know that, because some owners who hate paying taxes keep their salaries as low as possible so they don't have as much payroll tax being taken out of it. Other owners, for either just personal income needs or tax planning, or they're funding a profit sharing plan or a SEP IRA, they might set their salaries at $400,000, $425,000, which is not what it would cost to replace them in the practice. And so as we benchmark EBITDA, which we do just for interest, like it runs from 0 to 35% of revenues. And strangely enough, doctor pay also kind of runs from 0 to 35% of revenues. And so you can imagine that those tend to be related. And so you just have to take it with a grain of salt. It's why we like practice net as a thing. In terms of how doctors should set their salaries, I'd say it's really a conversation to have with their wealth advisors and CPAs. I don't. I assume that at the point it matters how we do that, we're going to be doing adjustments to a P&L to come up with a business valuation. Until you're ready to sell, do it make sense for your family, your tax situation, your wealth planning, and we can benchmark around it.
I don't know if you ever watched Seinfeld, but there's an episode where Elaine, she gets promoted to president and she goes on somewhat of a spending spree for personal expenses
Yeah,
on the company credit card. And then
yeah.
she gets audited, and her response is, isn't the president allowed to do whatever they want? And they said, no. And they said, we'll be down at your office on Monday. And when the auditor shows up at the office, she's watering the plants in the office with a dental water pick just to prove that it's a legitimate. She's got to prove now all these things are legitimate business expenses. So
Yeah.
as I was reading through the report, there was a comment in there kind of questioning if it's worth the risk. Where do you draw the line on that? And I know there's a gray area there, but as people look at putting expenses that kind of blur the line between business and personal, you mentioned that in some cases it might not be worth the risk, and the financial upside might not even be that great.
Yeah, I think, I would say the amount of money you'd have to put through your business, like personal stuff, to lower your net. Like if you think about, most people get taxed at, say 35 to 50 cents on the dollar. I mean, to have a material impact on your tax bill, you'd have to run a lot of stuff through there. And the baseline for most people on personal expenses, you take like health insurance, maybe running $22,000 a year, cell phone, maybe 4 to 6, a car payment, you're really looking at about 30,000 or so worth of stuff. And even at 50%, that's $15,000. It's not nothing, but we had I was speaking with someone at our connection meeting who was saying like, hey, never seen him go to jail over tax stuff, and that's true. But at some level, if you get audited, the process is the punishment, and it's really painful. And again, is it really worth it to save $7,000 on taxes? I just don't know. And frankly, like if you're bearing a bunch of personal stuff in your P&L, I think there's a cost to understanding your business and what it really needs to run and managing your cash, because you're making the business seem more expensive to run than it is. Um, and on exit, I mean, if you don't make it plain, like, I'm not paying for stuff that's not on the tax return. So like if you're trying to get your tax bill as low as possible, like when you go to assess a business, the most trustworthy thing is the tax return. And so, and I've had owners tell me, no, really, really, this business is more profitable than it shows. Like, well, if you can't show me, I don't know why I should pay you for it. So there's that. And I think it's just from an accounting standpoint for yourself, certainly for our team, keeping the personal and the business separate is just a better practice. It's a lot of work to go through and ask people like, hey, how many of these Amazon purchases were personal? Why is your grocery bill on, on the practice P&L? It's, personally for us, it's a complication, but again, I just don't, I think it can be pennies wise and pounds foolish sometimes on the impact.
So the last one I'll ask you about, and again, I'm just teasing some of the elements of this report out. So look forward to being able to distribute this to our members. Marketing. It jumps out at me as low. It's typically and traditionally been 1 to 2%. It doesn't look like that's changed a lot. Is that about right? I know we've historically, and that continues to be the case, and I don't see that changing. Doctors will say word of mouth is what drives the majority of the growth. Is that the right number? Does it depend on the practice, but that 1 to 2%, should they be investing more in marketing?
It's a really good question, and I don't have a great answer. We tried to tease out any correlation between marketing spend and patient growth or revenue per exam, in the sense that some of your marketing is internal to your patients. Think about all the pharma stuff. Ask your doctor about. Um, we couldn't really correlate dollars with any impact, and this is not a surprise for anyone who's looked at marketing stuff. I mean, in my first job, the marketing department was like, look, half your marketing dollars are wasted. You just don't know which half. Is sort of an axiom in that world. I think depends on practice goals, because some practices are so deluged with patients, like why would you bother? Um, but what are the opportunities in marketing? Obviously, driving patient growth, and that's usually some mix of website, digital SEO type work. I think the most underrated aspect of marketing a business is the owner actually getting out and networking with referral sources, and there's a cost of that in time that wouldn't be reflected on the P&L, but it's maybe the highest impact if you're looking for patient growth. Go find people that can send their friends and customers and patients to you. There's definitely an internal aspect to it in terms of getting in front of your own patients, and like, patients don't know what you do from a dry eye therapy standpoint to the new technologies, myopia control. Are you getting in front of your patients and prompting them to ask, like, hey, are there areas that my optometrist could serve me better? Even lens technology. I mean, there's a lot of areas that, how many people really know that a computer lens is a thing? So you could market internally. You're not seeing more patients, but you may increase your capture rate and sell through products that your patients need, not just that you want to sell them, on that front. And the other one that's interesting that our director of marketing services points out is, like, from a recruitment standpoint, your website actually has a role in your people, and having a professional and great looking website does impact the curb appeal of your practice to potential employees as well, which is something I don't think a lot of us think about, on the dollars and sort of the marketing infrastructure. So I think it's low organic because most practices do grow word of mouth. And what's not reflected on the P&L is the massive Groupon discounts that practices give to their vision care plans and health insurance payers, third party payers. That's best understood as a Groupon style marketing expense. We give a giant discount on our fees and services and products, and they send us patients. So, not really reflected on the P&L, but that's another aspect of marketing your business that is hard to account for in some ways.
Yeah. Something that's topical, not specific to the conversation, but you mentioned, I'll just reiterate what you said about getting out into your community. Because I think a lot of these things, obviously having a website, a great website is really important. Digital marketing, those things are very relevant these days. But something that I find in a lot of the more successful practices, they tend to be very involved in their community. They actually get out and meet real people, shake real people's hands and meet people. I've told this story before, but when I was practicing in my exam room, there was a drawer that had a bunch of business cards in it from ophthalmologists and specialists. And most of them were just mailed in. So when I had to refer somebody, I would reach in that drawer and I could pull out a card. And there was one doctor who is a specialist in the area that I would routinely grab his card and hand it to the patient. And you know why? It was the one doctor who stopped in and asked if he could meet me, and we talked for a few minutes so I could put a face to the person. And I always tell doctors, I go, it's don't send your receptionist over there. Don't just drop it off. If you just go in and ask if you can have 2 minutes with the doctor just to meet them. And I think that'll make a difference.
Yeah, and especially for the OD side of this equation, you think about who your referral sources are and sort of all the scope of practice and industry stuff. Like if you're going to call in a PCP or a pediatrician, like or an ophthalmologist, like you probably need to show up and prove that you know something about what you're doing. Um, just from a trust factor. You hate to say it, but I think it can make a difference.
So as we close out, Nathan, what if I were to ask you what could somebody get out of this as far as something that's actionable? Because again, this is a report, it's just got numbers in it, but what do we actually do with that data? How can owners learn from these benchmarks and apply these things to their own practice? And part two of a two-part question, when does it come out? How do you get it? How are we going to get our hands on it?
So IDOC members, it'll be hitting your inboxes. It'll be available on booksandbenchmarks.com. We'll have a post for it there for download. So that's you'll be hearing about in the trades. But if you're not finding it, booksandbenchmarks.com, check our blog, and we'll probably have a different tab just for the annual report where you can again download it. What are the probable takeaways and how a doctor would use it? I think for a lot of doctors, you could do a lot worse than look at the report, realize that your expenses are normal, and stop worrying about cutting costs and focus on growing your patient base and looking at growing your practice. So that would be one. Peace of mind is for a lot of owners. They just need to know they look normal. And once they do, it's like, okay, let's not worry about trimming costs. Because it really, and we didn't go through a lot, but you picked on a couple of areas where we can control costs because most of your costs are baked in. Your cost of goods pretty well flows from stuff you sell other than frame inventory. Your payroll's baked in based on your staff. Like it's going to be what it's going to be. Your rents are what they are. Your equipment costs are what they are. I mean, go down the list. There's really not a lot of areas that there's a lot of trimming to be done on the P&L. So knowing that things look normal are helpful. If things look high, certainly you can sort of ask like, why are we less efficient in this area? Are we overstaffed? Are we overpaying? In a lot of cases where things are high, I think that your revenue cycle and just getting paid by third-party payers is a big piece of it. There may be some pricing issues, there may be some discounting issues, but again, most of the answers on the revenue side, not the actual expense. And the other thing I hope people would see is like, if you have expenses that are lower than normal, I think a lot of times, and I've seen other reports where it's like you get a green light for you're below average. It's like, is that right? And there may be some, like if you're really efficient with your rent, great. Or that may mean you need more space. If if your staff expenses are really low, like, hey, you may have a great team that just delivers at a higher level, or you may need more staff. We had one practice, this is in the report, but AR was just out of control. And stuff over 90 days, is $80,000-$100,000 or so. And I'm telling you, like, you've got to hire for this. Like, you need a biller, and this doctor was telling me, like, but my cash flow is so tight. How can I not afford a biller? I was like, you've got 90,000 in AR. How can you not afford to spend 45,000 on someone to get this caught up and get your practice paid? So sometimes the answer to low profitability actually is that we're underspending in areas that we need to do the work of the practice to go. I mean, another area might be even opticians and capture rates. If you have low cost of goods, that's reflective in some ways of just not selling a lot of glasses. It may be that you need more optical specialists or more technicians to get patients through. So as you're looking at it, I think a lot of owners come in with the idea of like, hey, where should we cut costs? I would say also look at it with an idea of like, hey, where am I under resourced if I want to drive growth?
Yeah, as I read through it, I think it would help people start asking the right questions and then help them where they need to focus. Because I think we've both seen that issues where talking with another OD who was worried about one aspect of the practice, realizing that that's not the problem. The problem is over here. And so sometimes it just starts with getting clarity around what the actual problem is so you know what to address. All this flows through books and benchmarks. So if somebody want to find out more about that, they could just go to our website, right? I think there's a services
Booksandbenchmarks.com.
tab.
Or at idoc.net on our services, or Books and Benchmarks has its own website, booksandbenchmarks.com. A reasonably good explanation of what we do there. I'm writing a weekly blog there too. So if you want to hear more of my thoughts on overhead, profitability, financial issues for owners, I think last week's was on how much financial stuff should you share with your staff. It's kind of always kind of an interesting topic. So check us out, please.
Yeah, it's great. You guys have done a great job with the books and benchmarks. And, for anyone who's saying, well, I can do my own books, that's not wrong. It's just, I think the question is, should you be doing your own books and benchmarks as you're looking for ways to operate more efficiently? There's opportunity cost to everything. And is that something you feel competent that you can do it correctly, but also is that the best use of your time? So you guys have done a great job with, for X number of members. I forget how many members we have now.
It's around 145, I think.
145, taking that task off their plate. All right. Anything else as we close out?
No, thank you for the chance to talk to your audience, and it's always fun talking to you.
Likewise, likewise. So, all right. Well, thank you so much, Nathan. As always, we'll start working on that jacket for you for your 5th visit, whenever that happens. But thanks to Nathan, and thanks to everyone for listening. If you'd like more information about IDOC or books and benchmarks or any other product or service we offer, you can go to our website at idoc.net and find out more about how we work with doctors to help them grow their practice. So thanks to Nathan, and thanks everyone for listening.